So at this point, what I need to see from Bitcoin to feel more comfortable that this market's about to turn back up is more of a three-prong multi-time frame approach. I'd like to see a rotation back over a previous week's high. We haven't had that in a proper manner for many, many weeks. And what I mean by rotation, I mean a daily close over a previous week's high, not a little pop above it and then a fail. So in this case, let's start seeing 32.4, 32.5, a close over that. Then we'll move over to the monthly chart, and then it's got to prove itself by getting all the way back over 40,023. And until that happens, it's very hard for me not to think there's a door open that we could push all the way back to that 20 to 22,000 area. I want to be bullish, but I can't be bullish until I see those rotations. Now, if you go to a 3-month chart, the quarterly chart, this is a much different animal here. It still looks bullish, bigger picture, but this is a game of patience at this point. As long as it holds back and closes back over that 28,000 area, I can remain bullish on a longer term, multi-month, multi-year time frame. But I would definitely be looking for a move back over 47,450 over this high. And again, what we discussed last video is 48,000 plus on a daily close basis.
So what are you seeing based on your reading of the charts in the shorter term, say over the next 30 days?
Basically, and currently, I think if we can't clear back over 33,000 and change and start closing back over this downward sloping 50 SMA, back over that 31.45 area, and get over this red candle here, which is right around 34,250. If we can't do that, I think there's another move lower coming. I could see that idea being aborted if and only if we get those longer time frame rotations I just spoke about.
Dean, we're talking a little bit off camera about the liquidity considerations in Bitcoin and more generally in crypto. What are you seeing from that perspective?
Well, at this point, with the Fed pulling money out of QE and rates going higher, there's much less liquidity. As you've seen in the market, the stock market and indices in general, they've pulled back in anticipation of higher rates, 30-year bond rates, 10-year notes. All those rates have been going higher, and the cryptos reacted very, very similar to NASDAQ and tech stocks in general, and growth stocks. So as a result, I think that liquidity being pulled from the market has definitely resulted in a bit of a drag on cryptos in general.
Hey, Dean, one of the conversations I keep hearing among my friends and people in the space more generally is precisely the point that you just made about the correlation between crypto digital assets on the one hand, and for example, U.S. equities, particularly tech and NASDAQ. Is that something that you have an opinion on going forward? One of the open questions that I hear a great deal is this notion that digital assets, particularly Bitcoin, were in many ways thought to be things that had potential to be off the grid assets, decorrelated from, for example, U.S. equities. That has not been the case, as you point out. Do you have a view of whether that will remain so going forward, or is that something you're agnostic on?
I'm a little agnostic on that, but at the same time, I think that liquidity and the market in general, if there's not a lot of money flowing around in the market, I think it affects crypto just as much as, tech stocks or growth stocks for that matter.
Right.
And for me to feel that crypto is decoupled, I'm going to have to see potentially the stock market go flat or downwards and crypto really start rotating upwards. And if that doesn't happen, I'm going to look at it like it's just another risk asset, just like the growth stocks and the tech stocks are.
Okay, so let's move on to the next chart.
Okay, well, let's move on to Ethereum. Ethereum is very similar to what we discussed as far as the downtrend is concerned with Bitcoin. It's almost identical. When I used to work with a hedge fund manager many years ago, he said nothing good happens underneath the 200 SMA on the daily. Well, if you can see this yellow line being the 200 SMA, nothing good happened. Not that it's foolproof, but definitely it came into play here as it tested the previous breakdown area in this zone and tagged that 200 SMA. As long as we stay under there, very hard for me to be, bullish on Ethereum. Now, having said that, with this spike volume here and this low not being violated, I can be constructive on Ethereum if and only if I'll get, number one, maybe a doji up. This is a doji candle. Again, I've discussed this in a prior video, but I'll mention what I think of dojis. Essentially, what they mean is they're an indecisive spot in the previous week. So buyers and sellers were fighting over this area, and they decided to close it right at the same as they opened it. So if we can get back over that 2015, 2020 area, that's sign one that it's trying to recover off of that spike low. Again, monthly wise, it's got a lot of damage to work through. And the damage to me means back over 3,000, currently back over 3,000. That might change in a month, but for now, if it can't get back over that 3,000 area and start clearing this monthly high, again, I can't be super constructive or bullish. Once again, just like the Bitcoin, the quarterly chart looks really strong because we've got a big bull flag on the quarterly chart, and we tested the top of the previous breakout area, which is right at this green candle high, approximately that 2,000 area, give or take, somewhere between 1,800 and 2,100. And we're in that area right now. We would definitely have to really move higher to look like I want to be long again. I have no Ethereum in my account currently, but I am stocking it because of this quarterly chart and the bull flag on the 3-month chart.
Dean, one of the things that people often focus on is the round numbers, for obvious sort of human psychology reasons. We've seen Bitcoin get above that 30,000 mark since the most recent down cycle. Ethereum has not made the 2,000 mark. Is that something that you attribute any significance to one way or the other?
I don't. Round numbers are a factor maybe intraday or for a day or two, but overall, it's more about where the prior buying and selling has occurred. And in my opinion, that area for Ethereum is between 1,700 and 2,100. I said 1,800, but let's say 1,700 and 2,100. It's a wide zone, but when you're looking at something that was close to 5,000, 4,800 and change not that long ago, that's not so wide. So I would look at round numbers just as a general rule if I was trading short term or intraday, but at no point would I treat that as the end all be all of where I see support or resistance.
Okay, on to the next chart.
When we look at Solana, the SOL, USDT, it's again technically very similar. The one thing that I've noticed with it is that it's back towards where it broke out from. The ignition area was between 30 and 40. And it's come back to test it in recent weeks. If we can get back above a prior week's high, I think it's a pretty decent risk reward scenario to the long side down here. And, you can get away with a tight stop, and that's rare in crypto, in my opinion. So therefore, that's why I'm kind of stalking this one. It doesn't mean I'm buying it just because it's down here. I need to see some proof that there's strength in it. But certainly I'm going to be watching that weekly rotation, and I'll be watching the monthly rotation, which is, of course, way up over 96. And I'm not even going to look at the quarterly chart, although if you look at it, it's it doesn't have a lot of history. So I kind of avoid things that don't have at least 100 plus candles of information or history. So what I'm watching for on the SOL is simply the fact that it's back to the breakout area. It's testing it and holding it. I'd like to see a return of some volume in here. It seems to be that liquidity is drying up everywhere and there's much less volume. Look at all the volume in here. And then that recently it's very, very subdued. So let's see a return of volume and a weekly up. And you can get away with risking probably as little if you really want to play tight, just below 30, which isn't a bad way to go when you're looking at a thing that it's as volatile as Solana. So.
On a slightly different note around Solana, so obviously we know that some of this volatility has been caused by the network outages on Solana. I think we've had two significant periods of network downtime in about 30 days. How do those types of exogenous factors to the price play into your thinking about how these charts get interpreted?
Well, things like that are very, very difficult to interpret. There's such binary events that could occur at any time without warning. When you're trading technically, you cannot expect to have something like that happen randomly, like that, a binary, exogenous event like that outside of technicals, without it affecting you randomly like that. So I would suggest that stops are your only savior in that case, because planning for something like that, I'd say stops and sizing is the key. A lot of people just go all in on something without consideration of something like that happening. Okay, let's move on to the most controversial one of all, the Luna USDT.
Yeah.
As everybody knows, it's been a complete collapse. We've had a lot of issues with liability to the creators, et cetera, and how they managed it. But in my last video, I covered the fact that if this thing broke below 70, we would not want to be long because of the fact that we had a 2x month down rotation. You have to respect that. When you have an uptrend, notice that didn't happen. We had 1x down, comes back to the 10 EMA area, but it didn't follow through and break down and go below both of these lows the next month. So you had a continuation up. The trend showed signs of breaking here. You had percent R showing divergence, which is this purple line here. New high and no new high on the percent R, meaning a lack of momentum to the upside. And then you have this 2x monthly down below these two lows during this candle. So I'm not trying to be the guy saying I told you so, because that's useless in trading. Everybody has to respect losses as well as wins. But the bottom line is, this is a method that can be used to avoid debacles like this.
Hey visionaries, thank you for tuning in. For more free crypto content like this, head over to realvision.com/crypto. You'll get early access to the most brilliant minds in the space to cut through the noise, get in-depth analysis, and get you ahead of the curve with unbiased insights.